What is up, YouTube? Welcome back to another video on high altitude investing. In today's video, I'm going to be teaching you guys about risk to reward. This is a very useful concept in trading, and it really helps you avoid losses. It also helps you avoid panic selling bottoms. Risk to reward is a very simple concept. You're basically measuring how much reward there is versus how much risk you need to take to obtain that reward. So it's going to be a really awesome video teaching you guys the basics of risk to reward. So make sure you stay clear till the very end of today's video. Also, if you're not a subscriber to my channel, go ahead and hit that subscribe button. I genuinely appreciate every single person that does that. I also appreciate the commenters, the people that join in my free Discord, which, by the way, I am giving away free VIP, 1 year VIP, to 3 people in my Discord. I already picked 1 winner, so I have 2 more winners to pick this week. So just go ahead and share your favorite altcoin project with me through direct message in Discord. If I think it's a really awesome setup, I will give you free 1 year VIP, and you can get access to all of my signals and start making money inside of these markets. So that's definitely something. Click the links in the description to join the Discord and get inside. Have a chance to win free VIP. So without further ado, let's get straight into today's video. So what is risk to reward? Risk to reward, simply put, like I stated at the beginning of this video, is measuring how much risk you need to take to obtain a reward that you're looking for. And there's ratios. So like a 1-to-3 risk to reward ratio means that you're willing to risk 10% and make 30%. Right? So simply put, if you want to make a reward in life, there's always going to be a risk associated with that opportunity. So risk and reward is calculating that risk. It's your ability to calculate how much risk you're taking in order to meet the reward. Like I said, it's a ratio. So you might be willing to risk 10% of a loss in order to make a 30% gain. A 1-to-3 ratio. And there's some other very important aspects of risk to reward. When it comes to taking setups, risk to reward can also be defined with your Fibonacci levels. So on the left-hand side, we have this thing called the Fib retracement, which sounds kind of like a fancy word, but if you go from the bottom of the chart to the top of the chart, what we can do is we can measure out this market cycle from where it starts to where it peaks out, where everybody was euphoric, to down here where people are panic selling, and we're in the depression phase of the cycle. So what you can see here is we have Fibonacci retracement levels on the way down. Now, as we get closer to these levels, if we go to our market cycle chart, what you'll notice here is on our market cycle chart, this contracted phase of the cycle is the point of maximum financial opportunity. The peak of the cycle is the point of maximum financial risk. So risk to reward isn't only just about, hey, I want to risk, having a 10% loss to make a 30% gain. It's also based on overvaluation and undervaluation of markets. As you get to the lower Fibonacci levels, risk goes down and reward opportunity goes up. So that is so powerful. If you can understand how to use those Fibonacci levels to position yourself in the market, you can not only reduce your risk significantly, you can increase your reward. So that's kind of the connection between risk to reward in relationship to Fibonacci. Now, Fibonacci is kind of an easy way to measure those ratios out. Like I said, you measure from the bottom of the chart, from where the cycle very starts, all the way to the peak high, and then it will bring these levels on your chart, and you'll notice that the prices react to these levels. As you can see, that 786 level was tested. There was a lot of buy orders down there because it's a low risk entry, and you saw that we had a bounce. if you look on the chart, after that 786 level was tested, we had 181% gain on the upside. Why? Because whales, big players, banks, market makers, they use these same levels. They use the Fibonacci levels to determine their risk to reward so that they can reduce risk and increase reward. And this is partially also why Warren Buffett says, be greedy when others are fearful. Because as you get to those lower Fibonacci levels, fear is increasing, but risk is decreasing. And there's a direct connection between the fear in the market and the risk in the market. And so that's why you'll see people use things like the fear and greed index, right? When the fear and greed index is very, very, like right now we're in extreme fear on the fear and greed index. Now that actually presents opportunity. That means that we're in a contracted state of the cycle with maximum financial opportunity. So our risk is very low right now, and our reward is very high. And this is partially why technical analysis is supreme over any other form of trading method. Because what you'll notice is right here at the top of the cycle, the media will have you believe that that's the lowest risk, that crypto is the best thing ever. It's going to go up forever. There's no risk. Look how much it went up. Look how exciting this stuff is. There's no risk in this. It's the future, right? But it's actually the opposite way. At that point is the highest risk. So this is one of the reasons why I teach people don't go look at the news. And I tweeted this kind of funny thing. I mean, I'm not the funniest guy in the world or anything, but I thought this was kind of funny. This is what the world will have you think if you are looking on the news. This is what the world looks like if you look at the news every day. And this is what the world looks like if you step outside. So, you know, I'm no jokester or anything, but you guys, that's really goes to show exactly true for the cycle as well. At the top, you know, they're going to make you think that it's the most beautiful thing ever, that everything's okay. And then at the bottom, they're going to, so the media lies to you, right? The media is lying to you a lot. Now, this is also an ABC correction. And what's really neat here, you guys, is you can actually take Bitcoin. And if you haven't seen my Dogecoin videos or my recent videos on Dogecoin, it's the same kind of thing here as well. But, you know, there's people that are going to be really bearish on a project like Theta right now as a result of fear. But all of that fear presents opportunity and actually decreases our risk. So you can see here that Theta is actually a spitting image of the same zigzag correction that Bitcoin did. And the zigzag, by the way, is over 76% success rate. It's one of the highest success rate patterns in Elliott wave theory. So you guys, Theta is looking very good from a risk to reward perspective, right? We're nearing those low fib levels. It's testing the 786 and the 88% retracement, which, by the way, was the exact same percent levels that Bitcoin tested in 2015 before it went from about $200 to $20,000. Theta's worth about $2 right now. So you can imagine how excited I'm getting from a risk to reward perspective and from a technical perspective on these markets. So let's check out XRP, you guys. XRP is another coin I'm very, very excited about. Again, let's apply our new things we're learning about risk to reward. You can see that this one did an ABC triangle in its cycle. XRP is a very similar pattern. We had a market cycle from the peak low to the peak high. But instead of doing an ABC zigzag, we did a triangle correction. You can see because the A wave, the C wave, and the E wave are all higher lows. Whereas the C wave on this one is a lower low. So this is called a triangle correction and triangle Elliott wave. And what we actually see with this triangle Elliott wave is if we go from the bottom to the top with our fib tool again, what levels are we testing? The 786 level. So we're nearing, or we already actually tested the 786 level in July, which is when we saw a huge bounce here. But we're basically right above that level again. And so we're on the bottom half of this Fibonacci. And the bottom half corresponds to the point of maximum financial opportunity. So actually, XRP is extremely low risk, right? We're testing that 786 level. It's very undervalued down at these levels. So that one tool can really transform your trading a lot. If you want to learn how to use risk to reward on a more deeper level, stay till the end of this video and I'll talk a little bit about my VIP opportunities and my mastermind. But let's talk a little bit about Bitcoin right now, right? There's going to be a lot of people, oh, bearish on Bitcoin. Bitcoin's going to dump you guys. You should sell all your Bitcoin. It's bearish. I can't believe people are bullish. That's the narrative, right? That's a common narrative on Bitcoin. But let's take a look from a risk to reward perspective. Now, what's actually really cool about Elliott wave theory is that it can also help you determine risk to reward. Because Elliott wave 4 waves stop between the 382, the 50%, and the 618 level. You don't have to remember that if you're a newcomer. And you guys, if sometimes you're like, oh, this goes way over my head, am I too dumb to learn this stuff? No. I've been doing this since 2016. And so, you know, I do know a lot of terms that a beginner won't know. So in these videos, I really do focus on keeping it as simple as possible for you guys. So if you feel a little bit like, oh, I don't know about what the 382 or the 50% is, those are just other levels on this fib retracement. We talked about the 786 and the 88% on our last two coins. Well, Elliott wave 4 waves stop between 382, 50%, and 618. So from a risk to reward perspective, we're actually looking to buy those levels because those levels are going to be the point of maximum financial opportunity, the point of maximum fear in the market, and the best risk to reward ratio for us. So Bitcoin is perfectly on the 50% fib level. What is the number one first rule of trading that every trader should learn? Buy support, sell resistance. Right, but what is the majority of people doing right now out of fear? Selling support, the opposite of what they should be doing. And so what does that create for us? A low risk entry with a high reward. So that really is partially what defines a good trader. And they use the correct time frame, they use the correct fib levels, and they will use market cycles and Elliott waves and a few things to help clarify their risk to reward. Now, as we test this 50% fib level, as I said, there's going to be people trying to panic sell their Bitcoin, all these different things. But Bitcoin is not only near the 50% Fibonacci support level, but look at all of this price support, meaning that Bitcoin tested 29,000 in this area, Bitcoin also tested 30,000 in this area, and Bitcoin tested 34,000 in this area. So we have support on all three of these levels. And so what is risk to reward? Risk to reward is how much risk are you taking versus how much potential reward will you make? Well, if you take our trading plan tool here, you'll notice that I can set a stop loss at 10, 15%. Why? Because we have all of this horizontal support in the market. We have all of this price that has been supported in the past. So if that level breaks below, it's likely going to go quite a bit lower, right? So a lot of people are like, oh, risk to reward favors bears right now. But they don't understand risk to reward because they maybe haven't learned it. Because the truth of the matter is that we actually have a very tight stop loss in this area. And look, our first resistance is 30%. So this is a 2.4 risk to reward ratio. And in fact, I could bring this right to this level here. So now it's a 10% stop loss. So if I take this trade and I'm wrong, I'll get out at a 10% loss. If I take this trade and I'm right, I make a 30% gain. So this is a 1 to 3 R to R, or risk to reward ratio. So this actually favors the bulls. So this lesson really helps clarify, and it just takes away all of that fear. I get on these videos and I watch other YouTubers sometimes, and you literally can see in their face that they are shaking, that they can't even handle the market movement. And I'm only bringing that up to let you guys know that is because they don't understand technical analysis. If you understand technical analysis, that fear will not take hold in you. Why? Because a knowledge of the truth casts out all fear. If you have a correct trading plan that works for you, why would you ever be scared again? You're not going to let that destroy you. You're just going to make money in the markets. So yeah, you guys, risk to reward is extremely useful. It is very useful. And for swing trading in smaller time frames, that's when you use the stop loss, right? Maybe set a 10% stop. You really don't want to set a stop any more than 20% because it starts getting really hard to recover on those losses. So a 10 to 20% stop loss is about the biggest loss you want to take for any gain. But the gain can be 30%, it can be 40%, it can be 50%. It really depends on where the next major resistance zone is. So that's really good for swing trading in smaller time frames, which I do, not as much as the big time frame stuff, because you'll notice even on the 4 hour or the 12 hour, prices are much harder to predict than on the 1 month. Right? If you go back in my videos, you'll notice in the big picture that I'm extremely accurate. But when it comes to the smaller time frames, there's a lot more volatility. Right? It's like a resolution thing. Imagine having a huge TV so you can see the screen really easily versus having a really tiny screen and then you miss little parts of the movie. You're like, oh, I didn't see that. So that's why I swing trade less than I do big picture trading. Because statistically, it's a resolution thing. You have a smaller resolution, you're going to be wrong more. But in the big picture, we use risk to reward based on Fibonacci levels, right? The 50% level is being perfectly tested here. Again, wave 4 stops between 618 and 50%, so that's a prime low risk entry with a high potential for reward. So I hope you guys learned some stuff about risk to reward. In Elliott wave 4 waves, you'll notice that they do stop at those higher levels, but like on theta wave, we're on a 1 and a 2 wave, which is why we went all the way down to the 786 levels. And on Bitcoin, in its last market cycle here, a lot of people were flipping bearish at 3,000. But if you go back and watch my videos, I got extremely bullish at that level because of risk to reward, right? 786, 88% level. Very low risk, very high reward to buy those levels. So that one tool will completely transform your life. If you want to learn how to master it, the Mastermind program is absolutely for you. We meet 12 weeks, and then you get lifetime in the VIP as well. And basically, throughout that 12-week, we meet every single Saturday. There's a morning session at 10 a.m. MST, and there's an evening session at 3 p.m. MST. And yeah, we meet every single Saturday so that you guys can master this stuff. The Mastermind program. So, and we do help you set a goal. In the program itself, I turn 10,000 into 100,000. So we help you set things up to do 10 times in your portfolio. And what you'll notice is once your portfolio is set up to do that 10 times, there's no fear. Right? You have a solid trading plan. So if you're ready to take that fear out of the market and master the strategies that actually work in these markets, the Mastermind program is definitely for you. It is limited seating available. I have 17 members right now. and that will change, right? I will cut off the amount of members that I do accept into the program. So you want to take advantage of it now while you can. And I'd love to help you guys learn this stuff. I would love to show you guys what I'm doing to 10 times my money in these markets, and the strategies that I use to take the fear away and to not be thrown around, right? Because like I said, there's a lot of people that are thrown around by the markets that flip. They flip bearish at bottoms. So it's definitely fun to get over that and to consistently profit and to not fear the movement in the market. So thank you guys for tuning in today's video. Very bullish on Theta, very bullish on Bitcoin. Go study some risk to reward. Click the links in the description below for a chance to win VIP for free in the Discord. All you guys got to do is share your favorite altcoin with me through a direct message. Picking 2 more winners this week, you guys. Already picked 1 winner. So just share a coin you think is going to do a high gain, high percentage gain. If the chart looks good to me, I'll give you 1 year of my VIP program. It's a little bit different than the Mastermind, but it's a great place to start. Really can help you start learning this stuff, see how I'm taking these setups and what we do inside of there. So if that's something you're interested in, click the links in the description below to get that free VIP in the Discord. And if the Mastermind is something you're interested in, if you really want to learn how to do this and be able to teach it to others with the 10x portfolio, then apply for that below. That is going to be just a simple Google form that you fill out, or you can use my website, highaltitudeinvesting.com, and apply there. But yeah, it just takes a few more minutes. I'll hop on the phone with you, or my cousin Monson will, and we'll help you guys get set up inside of that program. So thank you guys so much for tuning in today's video. Happy Friday, everybody. These markets look amazing. Don't believe the FUD for a single second. Learn the actual truth of technical analysis so that you can cast out all fear with perfect knowledge. So thank you guys for tuning in today's video. I will see you in those future updates. And as always, stay profitable out there.